Hi everyone. Today we'll talk about what is equity mutual fund, about SIP and advantages of SIP. Before starting, if you missed my previous video on mutual fund, you can access the link from this video's description box. Let's get started. What is equity mutual fund? In equity mutual fund manager distributes the investment in shares across the company based on market capitalization, different sectors, ELSS. Under market capitalization, you have categories: large cap funds, mid cap funds, small cap funds. Large cap funds are larger companies like HDFC, TCS with market capitalization of 20,000 crore and more. Market capitalization is nothing but the share price into number of shares. Here, the fund manager creates a portfolio keeping all the larger companies together. The profit is expected to be much stable when compared to the other category funds. Next is mid-cap companies. So it's about the mid-cap fund. Those are the mid-cap companies which are expected to grow big and give good results. They have a market capitalization between 5,000 crore and less than 20,000 crore. Here the fund manager creates a portfolio keeping all the mid-cap companies together. The next is small cap funds. These are smaller companies, developing companies, risky business. The risk is higher, but the returns are also higher. So they can even give a 50% profit in 1 year. Also, there can be pessimistic years where it can go in minus. Next is the different sectors. Fund manager will choose the best out of these sectors and create a portfolio. Say example, fund manager will create one mutual fund keeping all the selected IT companies together. Say fund manager creates a portfolio keeping all these selected banks together. Next is ELSS. ELSS is equity linked savings scheme. So it comes with a lock-in period for 3 years and it offers tax benefits under Section 80C of Income Tax Act 1961. Moving to the next slide. This is an example of Axis Long-Term Equity Mutual Fund. You can see the different shares which shows it's diversified. So you can see Pidilite, Infosys, HDFC Life Insurance, Indian Hotels. So the stocks are shown here with the percentage. And we need to see that when we buy a mutual fund, this is how it looks to the public. And we need to understand that the entire portfolio performance is dependent on the independent stocks performance. You can also visit Value Research online website and you can type in the fund which you want to see and compare it with the other similar funds. So it gives you details about the percentage holdings, CAGR, expense ratio and so on. Moving to the next slide. What is SIP? SIP is Systematic Investment Planning. It allows investment of it allows investment on the selected mutual fund periodically. Say daily, weekly, monthly, quarterly, off-yearly, annually, and so on. It starts with as little as 500 rupees. Now, what is the difference between the SIP investment and normal investment? Assume you have 50,000 rupees and if you are making an investment 5,000 every month for next 10 months. This is called systematic investment planning. So you are doing it systematically every month or on a periodic basis. But if you are investing as a one time investment, say you're investing the 50,000 as 50,000 in 1 month, this is called as normal investment. What can go wrong is when you're investing the entire amount in it, when the market is higher, and if the market drops, then you can go in more loss. But with systematic investment planning, it gets averaged down. Say, for example, 5,000, 5,000, 5,000 every month for next 10 months. If the market goes down somewhere, it can come to 4,500. But again, the next month, the value will be increased. See, for example, you buy a brinjal for 10 rupees. And if the market price goes down and brinjal price is 5 rupees, then you can buy 2 brinjals out of 10 rupees. So here you can buy more as the value is increased. Market fluctuates and it's always better to sit as it gets averaged. Right. Moving to the next slide, the advantages of SIP. So as discussed, you can start the investment with as little as 500 rupees. Asset management companies manages the mutual fund. So we do not monitor the market closely. They will track them. The next is, since the investment is periodic, it results in average cost and it will help in maintaining the financial discipline. We'll cover more about the mutual funds in the next future sessions. Thank you.